Awesome. All right. Good afternoon, everyone. This is a session about shorting, uh, and hopefully, you have had an opportunity to actually look at the curriculum and potentially just read through it, maybe even practice. Today, we have quite a few new students. So, if you're new, go ahead and identify yourself. Just say hello. I am new. I know we have lots and lots of students. So, and this is amazing. Today we have over 300 students on the line. That's we're breaking records every week. Over 318 students so far. All right, I'm new to VIP. I am new. Hello, hello, hello. Awesome, awesome. All right, that's cool. That's cool. So yeah, you hang around and you get a T-shirt like this one. So that says, let me. I trade and travel. There you go. So just wanted to show off my new shirt over there for people who have not seen it. Shorting. What is shorting? Shorting is, like it says, real quick. It's a directional strategy where you're taking advantage of prices when they're falling. Up until this time, you have learned how to buy low and sell high, right? Buy low, sell high, meaning that your thesis is that price is going to be rising, right? It's going to be going up from $10 to $20 to 30 and so on and so forth. And so you buy it at the low, at the at the $10 mark, and when it reaches the 15, 20, you sell it, and so you make the difference. That's buying low and selling high. Pretty simple concept, especially for shares. Really had to lose on that one, but it is possible. So that's the concept that you have known up until this time. Today, we're going to introduce short selling, which is where you take advantage of when prices are falling. This is especially a good time to learn how to do this because as you've been looking at the markets the last few weeks, we have just been seeing stocks just drop. The prices just drop. You look at the market every time you turn around, the market is dropping. What's up with that? Let me just show you an example here. One of the stocks that I follow here has been on a downtrend the last several days. The last time that it was way up there was 1122. That's the S&P 500, which is 500 or so of the strongest companies in the United States. So they have been on a declining trend these last few days, and so that might be worrying some people. That might be leading some people to think it's a crash. It's not a crash. A crash is something that is totally different. It's a 20%, maybe it used to be 10%, but these days 10% is actually normal. So maybe 20% is what we might call a market crash. So we haven't seen that. We don't expect it. Don't worry about it. And not everything is going down at the same time. We have some sectors going down, some sectors going up, and we'll see that here in a second. What else? So before this, you did not know what to do when the price was not in your buy zone, right? Now we're going to figure out what happens when your price goes into your sell zone, and you're able to, you're wondering what to do. How shall you trade it? Somebody's saying shop. We'll take a look at shop. That's cool. Right. Yep. This is a webinar style, Sandra. That's cool, and that's why you're all muted. And the reason is because we're growing. Right. We have more students now, more than ever. We have. I had that number, 350. Going. A few seconds ago, we had 300 students. Now we have 350, and rising. I expect the number to settle about 500-600 today, by the end of this call. That's why we had to upgrade to a webinar style, but you can still talk. We still have the opportunity to let you guys talk. So let's continue about shorting. What exactly that is. We'll go through a few things. A good definition. We'll talk about some perfect market conditions of when to short. We're also going to talk about the risk profile. How do you make money when you do a short sale? And we're going to also talk about what you need to do a short sale, because not everybody can do a short. It's called a short sale or a short trade or something like that, but we'll go over what that means. We'll also look at some charts of some stocks or symbols that are ready to short, because there are particular times when you need that. Then, of course, we'll go through some examples of entering a short in one of the one of your favorite platforms. We can do it in TradeStation. We can do it in Thinkorswim. And I don't know whether we have any Canadian students. If we do have some Canadian students, then I actually do have interactive brokers today, so we might even be able to do that. You have Quicker? Yeah, Will is in Canada. All right, good. So what do you actually need to know about what are the requirements for short to be able to short? First and foremost, you need a margin account. That's the first thing that you need. You need a margin account in order to short. So most platforms will actually require you to have at least $2,000 in your account before they can designate your account as a margin account, right? As eligible to short. You might have a margin account, quote unquote, that is maybe $500 strong. But I think for the most part, and somebody correct me or give me additional information here, that of what the requirements are for your particular broker as you have seen it. So I believe it's $2,000 to get a margin account for TradeStation and most other brokers. Secondly, you need level 3 and above. You need level 3 and above. So level 1 and 2 is good enough for most things. You can buy shares, you can sell shares, you can I believe with level 2 you can actually buy puts and calls, right? You can buy calls and puts on level 2, but in order to short you actually do need level 3 and above. So level 3 is that level that most platforms designate as your ability to do some more advanced trading, right? You can buy and sell, not just buy, right? Let's see, level 1 you can sell short stocks. I don't know that you can do that. With the level 1, but you never know. What does level 3 mean? That means that the broker has verified your account, your credentials, your history, your experience, and that's, by the way, that's what it takes when they're looking to see what level to give you. They are looking at the experience that you put in on your application. It's a very subjective exercise, but because there's no cut and dry, you might apply today with the same information that you applied yesterday and get a different approval level. I don't know what the magic is. So I have found that that is quite subjective. So check with your broker. Check with your broker platform to see what the requirements are, and that's that way you will get it. All right. Those are the requirements. So what exactly is shorting? Let's think about it a little bit more. I typically don't read my presentation, so I'll let you guys read it. But this one is short enough for not too long, so I might actually just go ahead and read this one.
Eddie, before you start, sorry to
Yes.
interrupt. Someone is asking if it's possible to put your slideshow in presentation mode so that the slide will be bigger for them to see.
All right. How about that?
Perfect.
Something like that?
Yep.
All right. Their wish is granted. And that feels powerful. Right. So the only caveat is that I now don't see your chats and I lost all my controls. So we'll figure something out here. So you're selling something that you don't own. When you're shorting, that's what's happening. You're selling something that you do not own. And let's explain what all of that means. When it comes to shares, we know that you can buy and hold shares for a really long time. A really long time. You can buy Apple, for instance, and decide that you're going to hold it, for 5, 10 years. You're going to give it to your children or your neighbor, or so on and so forth. You're going to give it as a gift. It's not like an option contract that has an expiration date. This one has no expiration date unless the company goes bust, goes to zero, and then they're worthless. But typically, good companies, which are the ones that we trade, will normally hold their value for a very long time. And one way of making money is to loan those shares to your broker platform. Okay? It's called loaning your shares to the broker platform. Now, why would you do that? It's for shorting. Say you have 1,000 shares of Apple or 1,000 shares of a company called XYZ. We're going to use XYZ. And you're not planning to sell them anytime soon. You bought them at a very low price, and now they've gone up in price, and you believe that they're going to continue to rise, but every once in a while the price goes up and down. So you're willing to lend them to the broker. That's the first part. That's the part that we don't see, the part that we don't really follow too much. All we know is that when we're shorting something, the broker is lending us some shares. Who owns those shares? Is the broker, perhaps? Is it somebody else, a trader like me? Maybe. So there's a pool of available shares that are made for shorting. So you can short in and out. Sometimes there's not enough shares, and that's when you see HB next to the name of a stock. HB means hard to borrow. Okay, hard to borrow. There's not enough. So during those times that it's hard to borrow, it means that stock has been borrowed very heavily. There's not enough to go around for everyone, so the broker has to put you in line to be able to borrow some of those for shorting. A good example is some of these meme stocks like GameStop and what is it called? GameStop. Yeah, GameStop and am I saying that correctly? GME. I think it's GME. GME and AMC, BlackBerry. They're generally not good stocks to short, and we'll see why when we look at the risks involved in shorting. Let's see where we are. So that's where that's the basic history of shorting. So you borrow stocks from the broker, you sell them high to another trader, and then once the price falls, then you buy them back and return them to the broker or from wherever you borrowed them. It's very, very seamless. You don't have to get into the intricacies of of what's happening. But behind the scenes, that's what it is. So long story, that's what shorting is all about, right? Let me pause there for some questions.
Okay, we do have a couple of hands raised, Eddie.
Okay, and I think you
Now,
will have to unmute them manually. So
okay, let me see. It's not giving me, like when I hover over their name, it's not giving me that option to do that.
okay, let's see whether I can.
Well, let's see. Patrice, we're coming to you. Please unmute yourself. See if she's able to do it. Because normally when I hover over someone's name, it gives me the, okay, talking permitted. Yeah.
Yeah.
Okay, I see it now.
So Patrice, what's your question?
She's muted again. She was unmuted, but now she's muted again. There you
It
go.
was accident. I'm
Oh,
sorry. It was
okay,
accident.
that's
Okay.
cool.
Okay.
No worries.
Donald, we're coming to you. Please unmute yourself. You can unmute yourself, Donald.
Hello?
Yes, how you doing today?
I'm sorry, it automatically done it when it came in, so I have no questions. Thank you.
That's okay. Okay, next. Oh gosh, I must just say, Hunter, we're coming to you. Please unmute yourself and tell me how to pronounce your first name. Hunter, you can go ahead and unmute yourself.
Okay, good morning. So, and my first name is pronounced Arundel.
Arundel. Okay, thank you.
Yes, thank you. So, my question in terms of shorting when we loan those shares to the broker, um, I wanted him to elaborate on where those shares go back after that trade is done.
I'm sorry, so that last part you want to elaborate on?
Yeah, I just want to understand the process in terms of the shorting where the shares are loaned to the broker. Like if you're shorting and you have 100 shares of a particular stock, XYZ, once that trade is entered and you said that they were returned, I didn't understand that part.
Okay, all right, good deal. Well, let me go over it again. So you as the trader who is doing a short trade are the one who's borrowing, right? And the act of returning those stocks or those shares to the broker is buying to close, right? Buying to close. So I think you actually skipped a little bit ahead, but I do want to answer that question in more detail about that transaction, how it goes over from, how do you initiate a short trade and what do you do to close it? Because for every trade that you open, in order for you to realize whatever profits that there are, you have to close the trade. So I will go over how to open the trade, which is sell to open, and then to close the trade will be a buy to close or buy to cover. So we'll talk about that in a second.
Okay, thanks.
Okay.
Okay, Donald, we're coming to you. Please unmute yourself.
I apologize. It seemed like it popped up again. I
Okay.
apologize.
That's okay. It's something different about it because, like I said
Yeah.
before, I used to could be able to hover over people, but it's not giving me that ability. Tindy, we're coming to you. Please unmute yourself and also correct me on how to pronounce your name. Tindy?
Was that McNeil or?
No, Tendai.
Okay.
I'll go to the next one until they say something. K-A, oh, wait a minute. Look like they pressed it. Okay, go ahead and unmute yourself. You're unmuted.
Yes, thank you. My question is, I'm just new to the program, but during the Black Friday, I purchased a VIP. So this is very high level for me. Do you suggest that I stay in this class and just listen, or just not get into this until I finish the first trade and travel with Terry? Thank
Absolutely.
you.
Yes, I do suggest that you go through the first part of the program because it does lay the foundation for all these things that we're going to be talking about. So remember, this is a VIP and you're welcome to attend just to either see how it runs or get ahead on some of the topics that might be interesting for you. But it is so important for you to go through the very first 4 weeks of the trade and travel program so that you can become familiar by the time you get to this one. And these sessions, by the way, they repeat every 4 weeks. So you can continue with the other classes and then come back in about 4 weeks. We repeat them, every week. So good question on that.
Am I unmuting now? It said to unmute.
Yes.
Okay, hi, this is Kristen. I have been looking for this. I haven't been able to find it. I recall setting up options on my account which was quite some time ago, but I have not been able to go into my profile to find out what level that I was granted. Do you know where that would be?
Yes. Do you have the mobile app?
I'm on the computer on the website right now.
Okay. On the computer on the website, if you go into your balances and you scroll down to the very bottom, it should have your option approval level. So,
Oh, okay. That's why I haven't been able to find it. I've been looking throughout my account everywhere else. Okay. And if you wanted to, so I was understanding, or I found out later through one of the webinars for Terry, it mentioned that it's not a matter of, it's looking at your overall investing experience, such as if you've been investing with a financial advisor and through your retirement TSP or your IRA, that's also considered investing experience. So if you want to go back and do it, like request an upgrade to that, has anyone ever done that?
yeah, that statement is true. So, 401ks and IRAs and all that, you can release that as investing experience. So some people might even have over 10 years and they did not even know it.
Yeah. That's my
Thanks for your
case.
question.
Okay, thanks.
Okay, Gina, we're coming to you. Please unmute yourself. Oh, she disappeared. Maybe it was a mistake. Okay. I don't see any more hands. Gina
Awesome.
took her hand away.
And Syed, if you mouse over the participants list, I think you can, there's an option in there that says talking permitted.
Okay. See, I see that, but it doesn't let me, it's completely different from before.
Okay,
It doesn't let me do, like I could lower hands, unmute people, stuff like that, but it's shown differently now.
understood. All right. Well,
Okay, we
we'll
just
go over
got
it
one hand. We
a
just
little
got one
later.
hand. Okay.
Just
Maya, go ahead and unmute yourself. Nope, she disappeared. Maybe it was a mistake. Okay, Eddie.
all right. Good deal. Well, let's continue and let's see what the anatomy of a short sale looks like. And this is how the chart would look like when you are looking to potentially enter into a short trade. So based on this chart, I am seeing that the price has been trending upwards, if you can see that, and it reaches a point where it turns around and starts to go down. So you as the trader will most likely have plotted your seller zones, your buy zones, and when it reaches the seller zone and you're in between the distal line and the proximal line, that is when you decide that it's a good opportunity to short. Let me see if I can draw on the screen. I should be able to do that. Yep. So if I want to draw some lines here, let's say this was my leg in, and you probably cannot see what I'm pointing at here, but that's my proximal, and maybe my distal was somewhere there. So price has gone up and started turning around. That is when you can enter a short position. And at this point, you sell the shares. And we're going to also talk about, by the way, how do you do this with options? I realize that you haven't gotten there yet, but I will mention it briefly for those people who might be curious about that. So you're selling those shares, and as the price goes down, that is how you're making profit. So remember, when you bought low, you bought at 100 and sold at 150, you made $50. The difference between what you bought it at and what you sold it. Pretty simple, yes? And selling high and buying low, the concept is just reversed. You sell at 150 and buy back at 100, right? That's just how it works, and we'll do a specific example so that you can see that. So as the price goes down, just like these arrows are showing, once it reaches your buy zone, that is where you buy to cover. Why are we buying? because in the first place we sold it. And in order to close the position, you have to reverse that. So if you sold it to open, you have to buy to close the position. So the terminology that is used is called buy to cover, right? Almost the same as buy to close. It's actually the same. Is that helpful for anyone? Is anybody confused about what we are talking about in that example there for the chart? Okay, it's all good. I'm trying to exit the presentation mode here. So no questions on that. Actually, we do have a question. Somebody has a question there. Trying to unmute you. All right. What's your question there?
Good morning. Can you hear me?
Yes, I can hear you.
Okay. So I have a question. So I see the anatomy there, and I see all green candles. So if it's a mixture of buy and sell candles, but moving direction is upwards, is it not suggested to buy to sell when I get to the top?
At the very top, once it reaches its seller zone, you want to sell. You don't want to buy at the very top.
Yeah, but if on the way up, if the direction is going upwards, and there's a mixture of sellers and buyers trying to negotiate back and forth, but the general direction is still upwards.
Right.
So I'm wondering, it's not typical to sell when you get to the very top and you start seeing maybe just only sell candles.
I think it is actually typical to sell at the top. Now we notice the upward trend, but when we reach the top and the price started coming back down, that is when you sell. You don't buy at that point. In the seller zone, you sell. You do not buy. We only buy at the buy zone. So these green candles over here are actually good for short traders because you can see how the price runs up to a certain point, and once it reaches the seller point, if it is not going upwards and it starts going down, that is when you start selling.
Yeah, I understand that part. I think my confusion is sometimes because I've looked at some of my charts, and sometimes I see the trend going upwards, but there's a mixture of sellers and buyers, but it's still going upwards.
Yeah, that means you have not reached the seller zone if it's still going
okay.
up.
Okay, thank you.
Yes, you have to wait for it to reach your seller zone and then get your confirmation that the price has actually turned around before you short sale.
Okay, thank you very much.
You're welcome. And that brings a good point. When we're drawing these and we're deciding whether it's a good time to sell or enter the trade, we are always going to do the odd enhancers. The odd enhancers are the formulas that you have to calculate the risk reward, meaning that from the current price to your target exit price, you do need a 3-to-1 reward ratio, at least a 3-to-1. And that's what makes it, that's one of the things that makes it worth entering the trade. You also have to see that it meets all the other odd enhancers criteria. There's about 8 of them. You can get 8 points, You can get 8 points. And if you have a 7 or an 8, enter the trade. If it's less than that, you probably should not enter the trade. Okay. All right. Let's see. Somebody else has a question here. Christy, what's up?
Hi. My question is, at what point do you know when to do the buy to cover? What is your methodology of knowing to get or to close then?
Okay, that's a good question. The buy to cover is the same criteria we're going to use. We're going to use the same criteria as when you were buying low and selling high. How did you know what criteria to use to get out of the trade? When you reach the seller zone, right? But this time, since you sold high and you have a target buy zone, that is when you get out. That's your target.
Perfect. Thank you.
Yep. All right. So you do have to plot the chart. You have to do your order enhancers. Make sure that your seller zone is clearly marked with the proximal and the distal. Make sure your buy zone or buy level is clearly marked with your distal and proximal lines, and you get out either once it touches your proximal or just before. Okay, that's called your trading plan for that particular trade. Let's see, do we have any other?
Ninandika, please correct me if I said your name wrong.
Yeah, you said it correctly, but he answered my question already, so I need to lower my
Okay.
hand. Thank you.
Okay, no problem. And let's see here. Ramos, we're coming to you. Go ahead and ask your question.
Hi, I'm Dancy.
Dincy.
Hi, Eddie. So you're saying all the necessary steps to do a short sale, but I've experienced that I've set my buy to cover, but the stock didn't even touch my price. So what's the strategy? Do you have to set an alarm prior to the price so that when it turns around before even touching or not even touching your buy to cover price, and then it turns around, how do you catch your profit at the right time?
Okay. I hear several questions in there, but the right way, or one of the suggested ways, is to actually enter a bracket order, right? To enter a bracket order so that it puts you into the trade with your sell or short sell, and then your take profit, which is your buy to cover. And then, of course, your stop loss. We're going to identify that your stop loss is actually above the distal line in the seller zone. That's your stop loss. But to get into your question a bit more, you're asking about how to automate all of that process. The bracket order is the way to go. Setting an alert closer to your buy to cover price is also another way of letting yourself know that your price has fallen sufficiently enough that it is approaching your target exit. And at that time, you get to make your decision. Shall you sit there and watch it? Shall you make any adjustments if necessary? That's how you do it. You can set an alert or you can set a bracket order. Okay.
All right. Because it happened to me recently, and when I set I always enter with the bracket order. I just want to get used to doing that, and I've done that. But when I shorted, during my first time on a live account, the stock price turned around and did not touch the buy to cover. So it was just fortunate that I was in front of the computer when that happened, so I was able to, because that stock moves so fast that if I wasn't there, I would have missed that, and it would have gone up to the original price that I came in. So
Got it, Dancy.
I was just thinking if there's another strategy if you're not watching it.
No, the only strategies are to either sit there and watch it, or set an alert, or set a bracket order.
All right. Thank you.
You're welcome. All right. Okay, we'll answer a couple more questions and then move on to the next topic. So I think we have Jordan. Is Jordan the next, or is it
Jordan? Yes, Jordan is next.
Hey y'all, how y'all doing?
Good.
Good. How are you today?
Good. I really appreciate y'all. I'm new to VIP and Invest with Terry, so I just love what y'all are doing. Big shout out to everybody. I had a real quick question. So since I'm new, I've kind of been just using the sim, but I did attempt to use my live account to do a short, and it said that I wasn't permitted to. I know that I do have a margin account, but I wasn't sure if you all have run into that, or if like, do you need a certain account level or something like that to be able to short in the live account?
Yes, you do need a level 3 and above. So we talked about that at the beginning of the call.
Okay, got you. Yeah, sorry, I was a little late.
Yep. So yeah, you do need level 3 and above and the margin account as well to be able to short sell.
Gotcha. Okay, thank you so much.
Okay. All right. That was
Okay.
Jordan.
Janet, we're coming to you. Please unmute yourself.
Yeah, hi, this is Janet. So you mentioned that the only way you can do it is a bracket order or sit and watch it. Can you not do a trailing stop for shorting?
You could do a trailing stop. There are people who are very adept at that. I don't do trailing stops too much, so it slips my mind quite often. But that's another strategy that you could employ to take advantage of the profits when you don't know where the bottom is.
Yeah, because that's what I find the most challenging is that I would do, go in my sim, I do a trail, whether it's long or short, and it start moving, I get in and I'm doing fine, but it doesn't hit the target. And then the next day I just lose all that profit. And I'm
Right.
like,
So are trailing stops working for you? Is that what you're saying?
trailing stop seems to make me have a little bit more profit
Okay.
because I'm doing my zones right or wrong, but I am getting in. But then, it doesn't touch the target. So maybe I'm missing the most recent target. I don't know. So that's something I've just been trying to work on to make sure I acknowledge all the zones because the next day, because it didn't touch, then the next day it just goes right back down. And then I just get stopped out at my stop market.
Got it. All right. Well, that's the lesson there for all of us to make sure that we have all those zones marked out. Your buy zones, your sell zones. It's important because many times the stop, or rather the stock, does not just go to one zone and then return to the lower zone or the upper zone. There are so many zones in the regular ebb and flow of stock. So you do have to have that awareness. Trailing stops are great, but there's also tons of videos about that. If you just believe there's a couple in the curriculum and also on YouTube.
Okay. Thank you.
All right. No problem. Thank you for your question.
Okay. So is that Janet or Janet is next?
I think that was Janet.
Okay. Then MJ, we're coming to you. Please unmute yourself. You're unmuted.
Hey MJ, what is your question? All right, I think we'll just move on. Okay.
Okay.
He does not have a question. All right. Okay. Cool. So let's talk about what happens. What are the perfect conditions for shorting? Right. The perfect conditions are you want to check the market to make sure that stocks are generally going down. Right. Prices are going down. That's how you identify whether it's a good time. In particular, the stock that you're intending to short needs to be in a seller level, right? Seller level. So we know that we don't trade in between zones. At the buy level we buy, at the sell level we sell. So make sure that your stock is in a seller's level before you short. You also want to compare and see other stocks within the same sector. For instance, if you want to short something like Mastercard, which is in the financial industry, what are the other stocks in the financial industry doing? Are they generally going down? Are they generally going up? And if the one stock that you decide to short is the only one going down, you might experience some difficulty, unless, of course, there is unfavorable news about that particular stock. An example of unfavorable news is earnings. Right, earnings might have caused that stock to go down, but of course, at this point we are not trading any stocks that have earnings plus or minus 3 days. Right, plus or minus 3 days. We like to stay away from that, and there's a good reason for that. It's because there's very high volatility, very high unknown. Swings are very wide and unpredictable. A stock might have great earnings but still drop. We've seen Apple many times over where they had stellar performance, but because traders interpreted it, somehow, however they worded it, their stock price still went down. So DocU is a train wreck. That's a good example of a stock that didn't do too well. In fact, I meant to bring it up here. DocU is one of those. So I'm looking at a chart of DocU. This was, if you had an idea that their earnings would be bad, then you might have wanted to short. But of course, hindsight is 2020. They dropped approximately from 230 to maybe 135. So that's about 100 points, give or take. It would have been a perfect or a really good shorting opportunity, but hindsight is 2020. Okay, and let's see what else we have here. When not to short, obviously when the market is trending upwards, you don't want to go against the trend. And this is true even for when you're buying low, selling high. You don't want to buy when the stock is going down. That's opposite of everything else. Do your odd enhancers, which means that your 3-to-1 risk reward ratio has to fit the bill. It has to fit that trade. So like I said in the very beginning, short selling is actually a very try not to use the word short. It's not a long topic. How about that? Not a long topic. So your questions are welcome. I know we have a lot of new people who for this is the first time. So your questions are welcome. And then we'll also talk about how to short using options. And before we do that, we're going to actually do an example. Does anyone have an example of a stock that they want to see shorted? Okay, I'm seeing a few here. All right. I'm just going to pick an arbitrary one. Okay, we've got a few examples here. So somebody said Tesla. Let's take a look at Tesla here. So Tesla is currently in a downtrend. Okay. Okay, Chipotle is CMG, is that right? CMG, yep, it is CMG. And it is in a trend of its own. Okay. Okay. You could short CMG. You'd have to chart it maybe a little more just to make sure that it's in the zone. Let's see, AZO, which is one of my favorites. AutoZone is actually in. It's approaching the earnings season. And how do I know? Because I've got these two icons down at the very bottom that tells me earnings on the 7th. So we avoided plus or minus 3 days. So we can pass on that one. CVNA by Sandy. CVNA. Never heard of that one. Actually, I think I have. Is that Kavana? See, Kavana. All right. I don't even have enough data for the last 6 months. I might have to go back 1 year just to see how it looks like. Yes. So this one, in the last 52 weeks, the lowest it has been is 219. It looks like it tried to go even further on Friday. And it could go down. Okay, Kavana. All right, we'll take a look at Kavana. Let's see. I'm gonna break that down. It got downgraded. Okay, so that's a reason maybe to short it. Okay. Adobe. I thought I added it to my list here. ADBE. That means it's on the list. Does anybody see it? Ah, there we go. Adobe is, let's see, it has earnings coming up on the 16th. Today is the 4th. So we're about 12 days. We've got 12 days. Got 12 days. So we could short Adobe as well. All right. I'm going to look at one more and then we will pick one of them. Ah, HD is the winner. I think HD is the winner. And let's see ZBRA. ZB is also there. Okay. So let me discuss what my criteria is for choosing what I want to short. Somebody said CMG. Now CMG is already on a downtrend. If I was going to short CMG, I should have been thinking about that at around 1875. It's already left the sell zone. It's already left the sell zone. So my thinking here is that I am late to the game. Now is not the time to try and catch it as it still goes down. Even though I could chart these as a, some zones over here, that I still have about maybe $60 give or take for it to go down, or $50 give or take. So it has already left that zone. So I don't like that. Tesla, same case, at around 11.5 or 11.50 was when I should have been thinking about it. It may turn around. You could argue that it is falling into a buy zone that it's creating here, right? Leg in, base, leg out. So that is probably not a zone I want to play around with, because it could go up or it could go down. I'm not sure. It's not very strong to me. But when I look at Home Depot, I can see that over the last 52 weeks, it has hit a high of 416. Let me go back 2 years just to make sure. I'm going to add 2 years. And yes, this is a 2-year high. I like it. I love it. So I'm going to go with Home Depot. And we're going to see what that looks like. So first and foremost, we've identified some of the A trades that we could take, but we're looking for an A+ trade. An A+ trade is one that is just hit the all-time high fairly recently. It has not seen that level or above in a long time, and now it should be coming back down. Okay, so this one fits that bill. It looks like we are seeing a few red candles here, and we could short, but we're never sure that our trade or our thesis is correct, 100%. So we have to use some risk management. The risk management we're going to employ here is a stop loss, right? A stop loss. People are asking, am I on what platform I'm using? I'm looking at Thinkorswim, but I also will be looking at the same trade on what is it called again? TradeStation. How about that? TradeStation. So I don't know whether this interface is good. Do you guys like to see a white background, or do you prefer a dark background? What is easier to see? Black? Light? Dark? Oh my goodness. I shouldn't have asked. Okay. Either is fine. All right. Dark is good. Please enlarge. All right. All right. We'll stay with the black background for now, and then because it does show us a few things. All right. So for now, it looks like, wow. Oh yeah, this thing is all the way up there that I have to scroll back and forth just to see where the top is. So we'll start with TradeStation. I think that a lot more of the newer people here answer this question, and I don't want these from existing or rather older students, older in the sense that you've been here before. So if you're new, what platform are you using? I want to see what platforms you're using if you're new, not if you've been here for a while. Okay. Webull, TOS, TradeStation, and I saw somebody say CNBC. Did somebody actually say CNBC? Robinhood. Okay. All right. TradingView, TradeStation. All right. TradeStation wins the game. If you're using CNBC, we need to talk, because that is not a trading platform. CNBC it's an information app. It's just to give you some information about what's happening in the markets, maybe build a watch list over there. But once you're ready to start trading, you want a real trading platform like TradeStation or Thinkorswim or Webull or Robinhood. It doesn't matter, but not CNBC. CNBC is just for news and information. So to place a trade in TradeStation, obviously you are going to bring up the chart, and this is what we're looking at. Okay, this is the chart for Home Depot, which is HD, and we are going to plot it. We're going to do some charting on it. So since TradeStation does not excuse me, does not give us some very good charting capabilities, we are going to be very sparse with the charting here. So I am going to plot my seller zone and my buy zones. I'm going to need some help. I'm going to give you guys some work to do. So somebody give me some ideas on what our seller zone is here. Somebody says enlarge. I'm going to close these. I'm going to close the quotes. I'm going to maybe just give it two things over here. Is that too big, too small? Maybe that's the wrong thing to do. Maybe I should simply go like that. How about that? So that we're only seeing one thing. Okay. I made it a little bigger because I have a large screen over here and I'm not always sure whether you can see it well. Okay. I'm more interested here in what the buy zone is than the sell zone, by the way. So I will pick the horizontal line here, and I am looking for a seller zone. Remember, when I'm looking for a seller zone, what do I look for? I look down and to the left, right? I look down and to the left. The V's are the strongest zones. Some people will actually look for chairs. I don't pay too much special attention to the chairs. I can see a chair over here potentially, but the first pick or the first value that I see is somewhere around that 366, 365 level. Is that about right? And the gap is also a zone, so I'm going to mark that as well. So for the purpose of this exercise, I'm just going to have one line about that. That is our target line. And the target here, we're going to, and I want you guys to go through the whole 9 yards of identifying the odd enhancers. You need to go through that every single time. But this is a class about shorting, not necessarily about charting, but you do need to know how to read the charts and how to identify the buyer and the seller zones. So let's go with that level over there. What is that? 382, right? 382 is our target. 382, and our current price is $407. Everybody comfortable with that? Current price is 407 and our target price is 382. Why did I choose those two numbers? It's because I want to do a short sale at the current price. It's always going to be at the current price, and then my thesis is that price is going to reduce. It's going to fall all the way to 382. That is my first target. It could fall further, but for now, that's the first zone that I see that we could potentially go to. And that is, somebody do the math for me here. 407 minus 382 is what? It's about 25, right? It's about 25. It's about 25. Awesome. 25. So let's enter this trade. I am in TradeStation Web, by the way, for those who are asking. TradeStation Web. So to enter this trade, as I am looking at this chart, I can click on this big green button that says trade. By the way, I'm in Sim, I'm not in live. Click on trade, and it gives me a dialog here that allows me to put in a limit order, limit price, and a duration and that kind of thing. And it has two buttons here. One is buy and the other one is a sell short. I am interested in selling short. Now remember, this is just the simplest way that you can do it. You could simply enter the 407 here and sell short, but that's too simple, right? That's a one-way thing. You have not protected yourself. You have not set a stop loss. You've not set a take profit. So we're not going to do that. This is not the way to trade. The way to trade, I'm going to cancel that, is to choose OS, the OCO OSO, and I'm going to choose the first option here that says entry long with bracket. Okay, entry long with bracket. It is going to give me this dialog here, and I will change a few things. First thing that I'm going to change, I don't want to buy, I want to sell short, so we'll change that to sell short, and I will change the next two to buy to cover. Okay, that's the first thing that I'm going to do. When you do your odd enhancers, remember that you also get the quantity that you need to work with, right? You also get the quantity that you need to work with based on your risk to reward, based on your risk tolerance. That's subjective. So we're not, since we didn't go through that whole exercise of finding the odd enhancers, I'm going to pick an arbitrary number and say I'm going to short 5 stocks, right? I'm going to short 5. What's the buying power required for 5 stocks? I do need at least 5 times $407 in my account, right? 5 times 407. I need a minimum of $2,000 in my account to be able to short this. So, and your broker might actually require more, especially when you're shorting, because of the upside risk. We talked about the upside risk where price could go up in to infinity and you lose a lot of money broker's most likely going to close out the trade and ask you for more money. Okay. So let's continue with this example here. What's our limit price? Our limit price here is going to be the current price. Okay, the current price right now is 407, and I'm simply going to click on it and it pre-fills that for me. I like working with round numbers. Let's go ahead and sell that at $407 for this example. Is that cool? I'm borrowing 5 shares. I'm going to sell them to a trader at $407. Okay, and I'm putting in a GTC order. What are the next 2 lines? The next 2 lines are, the very first one is going to be my take profit order. Right? This is my take profit. And because I sold to open the trade, I will need to do the opposite of what I did to close it, which is buy to cover. We identified that our target is approximately 382 on this blue line over here. So we're going to buy to cover at 382. You with me so far? I can't see your heads, but I think you're all nodding. Right? I think you're all nodding. Yeah, that's how I know. All right, good deal. Then we're going to talk about our stop market. Our stop market, this is our risk management line. We always have to have our risk management. So, time for a quiz. Do we make money when the price of Home Depot goes up or when it goes down? You may answer in the chat. Okay, I see down. I don't see anybody saying up. Awesome. So, knowing that the price of Home Depot is 407, if it goes to 410, will we be making money or losing money? Same question asked a different way. We're going to be losing. Awesome. And in order to protect ourselves, now we know that we're going to be losing if the price of Home Depot goes up. We need to set our stop loss higher than where we bought it. How much higher is the question? How much higher is the question? 20% of what? 20% of ATR. Okay, 20% of ATR plus the price. Yep. So given that our buying price is 407, and let's say let's call that our disto as well. How about that? For this example, we're going to call 407 our disto, and we're going to add 20% of that of 407 to that. So what's our ATR? Let's go find the ATR on TradeStation. I find the ATR by clicking on this icon here. It's called average true range. That's what ATR, by the way, is. ATR is average true range, in case you were wondering. I'm going to add it. The average true range is 9.97, and easiest way to get 20% of that is to divide by 5, right? And I get 2. All right. So we're going to add $2 to. We'll add $2 to 407. That is 20%. I have removed my ATR. How do I do that? I just highlight it, click delete. That's how I did that. All right. So Anita has done the math for us here. Thank you so much, Anita. So 409 appears to be the price point at which we're going to protect ourselves. It means that if the price rises to 409 and we get stopped out and the system actually sells it, closes us out at 409, somebody put in the chat based on what you're looking at so far, how much will we have lost? This is a math question now. How much will we have lost? All right, I see 10, I see 1,000, I see $2, I see $10. All right, correct answer is $10. How do we get to $10? It's 407 minus 409, which is 2, times the number of contracts. Don't forget that we have 5 contracts in this example. 5. So if you're losing $2 per contract, then you have 5, that makes 10. Is that a good risk reward tolerance? What is the likelihood that you are going to be stopped out in $2? What is the likelihood? Very, very high. You're going to be stopped out in no time flat. Right? And how do I know that? Because I can see that already this price potentially goes to 416. I would say that you can adjust this on your risk tolerance. I'm going to put a price here of 415, help you guys out. And that's because I can see that the fluctuation here, first and foremost, we identified that the ATR here is 10, meaning that Home Depot can move up or down 10 points. Doesn't mean it's going to move up 10 points, in one direction all at the same time. It's a combination of, something like that. So don't get stopped out on a good trade. If it's at the all-time high, then give yourself some grace. So 415. Now that we've increased our stop market to 415, it means that we can potentially lose 415 minus 407, $8 times 5. We can potentially lose $40. I think you can risk $40, even a bit more than that. Right? We didn't use the disto, that's true. And that's because we did not plot everything. So I would be willing to even go a little bit higher than that. But for this example, we've seen that if you use $2, you're going to be stopped out so quickly. You won't even, before you say Jack Robinson, how did we get to 415? It is subjective. Sandra, it's subjective. Because we identified that the ATR is about 10. We've also looked at the chart to see how high it has gone. And also subjective because my risk tolerance might be a little higher or a little less than yours. How much you're willing to lose, that is correct, right? But I prefer to phrase it as how much I am willing to risk, not lose. Okay, how much I'm willing to risk. So I'm willing to risk $40 in this trade. Incidentally, if you ever find that your risk amount is too terrible to handle, then your position size is too big. It is too big. If your risk tolerance is 100 shares, by the way, that's how you, when you go through your odd enhancers, you will go through that and identify where your risk tolerance is. But yeah, if you find it is too high, then you need to reduce that. You need to reduce that. Okay, so that's how we got the 415. What is left to do? Simply send the orders. That's it. Yep, that's it. So confirm simulated order. I am going to sell short 5 at 407. Okay, I'm going to receive a credit in my account immediately of 2,035. Doesn't mean that it's available to me yet because this is a short trade. And then I am going to buy to cover at 382. When the price goes down to $382, then at that point I will buy to cover. How much is the profit on that? We discovered was what, $25? So 25 times 5 shares is by math about 125. Okay, about 125. Okay, and if things don't work as planned, then we're going to lose $40. $40, we calculated that as 415 minus 407 times 5. Okay, times 5. I think I lost my chat panel, my participant panel, so I don't know whether we have any questions or not.
Okay, Eddie, MJ has raised their hand again. And then this is the first time that people have pre-sent their questions in the little Q&A box. So I'm going to go to, oh, now MJ just lowered their hand. I'm going to go to, oh, they both just lowered their hand. Okay, let me go to this Q&A box. This is a first. Let me see here. KH said, I recall setting up options on my account, but do not recall the level. Okay, no, that is not related. So you're buying low to cover what you borrowed in the first plate. That's by Ag Taylor.
Yep, by A. Taylor. Yes, that's right.
Yeah.
Mhm.
Okay, and then the next one is, let's see. Okay, that's not related. I just want to do the related ones first. Can you please go back to best time to short slide? I want to take a screenshot. Let me see. Someone asked how you add the earnings wheel. I told them for Thinkorswim, the earnings wheel is automatically on the chart. I think in TradeStation, is that something you have to buy in the store to add?
What's that?
The earnings. Oh, and you know how in Thinkorswim, the earnings icon is automatically on the chart standard. But I think in TradeStation, you might, I think I recall you had to like buy it from the App Store or something to add it.
To get the earnings?
Yeah.
I don't know. Yeah, it's possible you have to buy it, but you can also see it in your watch list if you want to see the earnings date, and I can show you real quick how to do that.
Okay.
So, but let's finish this example first, and then I will show you. I lost my screen. Where's my screen? Go back here. I'm using a platform that I don't usually use too much.
Okay, no problem.
Here we go. Okay, there we go. No other questions? All right, cool. So let me finish this example. We have 3 orders in this place, in this particular example. We're short selling 5, we're buying to cover 5 and 5. We're taking profit at 382, and we are managing risk at 415. I'm going to click send orders and click on send. Once that happens, you see these 3 things just pop up, those confirmations. Where did those go is the question. I go to my orders tab, and I can see that I've got my orders here queued, and because I set them to GTC, these are going to be filled on Monday. Right, these are going to be filled on Monday. So always remember, by the way, to set your buy to cover or your take profit and your risk management as GTC, because the trade may not happen that day and you don't want it fall off the system. So GTC is important. If you just choose day, then at 4 o'clock Eastern time, that order is going to drop off the system. All right, but you want it to persist. What is GTC? Good till cancelled. Right, and that lasts for 90 days. Okay. Somebody says TradeStation removed the earnings, so I want to show you where to find the earnings now. So if you go into your I think that is quotes, maybe, yeah, quotes. All right, so if you go into your quotes, there is there's a column. The last column says next earnings report. It's not very intuitive. You have to go in and kind of see these, but that's where you found it. That's where you find it, the next earnings report. Previously, it was actually on the, somebody help me, was it on the chart itself? Could have been on the chart, maybe, I don't know. So yeah, it might have been on the chart. So all right, so we've covered how to do this on TradeStation. How do we do the same thing on Thinkorswim? So I'm going to navigate over to Thinkorswim, and I'm looking at the same thing that we were looking at in TradeStation. I'm going to draw some lines here. 407. is where we decided that we're going to place our trade on, and 382, right? 382, that was pretty close. All right, that's our target. So to place an order in TradeStation for stocks, there are several ways to do that. You can right click anywhere you see the price, you can right click on it. So I can right click on the price here, 407, and do a buy. I can right click on this blue region over here, or I can just click on it. Actually, I just clicked on it and do a buy. But the right way to do it is to either of those, to buy custom and choose the first option, which is with OCO bracket, order cancels order, or one cancels another. I've heard that acronym described in a few different ways. I don't have an Eddie way to describe it. It's just OCO. I was gonna crack a joke there, but no. All right. So I want to increase the number of shares that I'm buying. Oh, you know what? I made a mistake. That's not buy to cover. I actually want to sell custom. That's what I want to do. I want to sell. I don't want to buy. I want to sell it. Right? We're doing a short sale here. So I am going to sell. I'm going to increase the quantity here to 5. And obviously I am going to buy back 5. There ought to be an easier way to do this. I'll find it one of these days. And then I'm going to set my limit price. And I will show you a few things. Oh, let me increase the font size here for those of you who might need to see this. I'm going to go with large. Is that a little better, or should I make it even bigger than that? I think that's big enough. All right. Okay. Bigger. Somebody says bigger. They want to see it even bigger than that. Okay, I can make it bigger. I can make it larger. For your benefit, I will do that. I certainly want you to see this. So we have set up our order here, and the price is a limit order. Just like we saw in TradeStation, we can set our price to exactly $407. Notice what happens. This padlock is now locked. If you unlock this padlock, you will allow the system to get you in at that price or better. And since you're selling, it means that if we have a higher price, say if price goes to 408 really quickly, it will sell for you at 408, which is great. Okay, so for this example, we're just going to stick with 407. We're going to log that price in, and then the next line is describing our take profit order. We saw that we were going to come out at we're going to sell at 382, and the next one is going to be a market order. We're going to protect ourselves at 415. All right, same parameters, same numbers that we used in TradeStation. And then you simply click confirm and send, and you get this dialog that says that you have got 3 orders. Order number 1 is your sell, your order number 2 is your buy to cover, and order number 3 is your risk management. Any questions on that? Any questions on that? It's pretty simple, isn't it?
Okay. I saw a hand go up. Did you want to go to the hand questions or wait?
Let's do that.
Okay. Sherlyn, we're coming to you. Please unmute yourself.
Hi. Good morning, Sensei. I guess it's afternoon now. Wanted to ask you what the difference between the stop market and the stop loss and why you're using this one here, please.
Okay. Why am I using the stop market instead of a stop? Instead of what?
Stop loss. I'm confused about the difference between the two.
Okay. So I think your question here is this method here in the stop. Could I have used a stop or a stop limit? I think that is what you mean. So a stop, let me explain the difference here. A stop market, once the price hits 415, you're telling the system, get me out at this point, right? Don't care what the price is, just I want out. And it can pick an arbitrary price, not necessarily at 415. It can pick 416, 414, 415 and a half, 413, based on what is in the market at that particular moment. And it is also possible that that stop, if it happened overnight, could be catastrophic. Might not even trigger until 500. That's a stop market. But we still use it anyway for that particular reason. The other one that you can choose is a stop limit. Now, when you put a stop limit, then you have two prices. You have two prices that that you need to put in. The first one is where do you want the order triggered? Right, that's your stop price, and we'll show this in TradeStation also. That's your stop price. And when price has hit 415, where do you want to exit? What you want to control this. So I could say, since my stop price is 415, go ahead and set a limit order for 418. You might be tempted to leave it at 415, but that wouldn't make sense because you have not given the system enough time to work on your order. So if it's at 415 and the price is still moving, that stop limit will never happen. So you do need to give it room to move. And somebody's reminding me here that this need to be GTC. Good till canceled. Thank you for reminding me. Okay. Sherilyn, that was you. Does that answer your question about that?
Yes, thank you.
Awesome. And let me see how we can do this on TradeStation. On TradeStation, actually, this answers two questions in one. It answers your question, Sherilyn, and also somebody wanted to see how we got to that OCO order. On the web version, I clicked on OCO/OSO. I chose entry long with bracket, and the symbol here was HD, and we chose 407 as our entry price. Our exit was actually 382, but this time, instead of doing a stop market, we're going to do a stop limit. Okay, stop limit, and you can see now I have two boxes here. One is the limit price and one's the stop price. We want to get stopped at 415, and we want to buy to cover at no more than 418. Remember to change these to buy to covers. Yep, there we go. So sell short, buy to cover. Change your quantity, and we've recreated that order all over again. So that answers two questions in one.
Are you ready for another question, Eddie?
I am.
Okay, Ninandika, we're coming to you. Please unmute yourself.
Okay, thank you. Okay, I have a question. On TradeStation, you showed us how to get a quote for the earnings. I think the version you're using is different from mine. I can't find it. Where did you find yours, please? The quote for the earnings.
That was on the quotes screen. I believe if you expand that, it is one of the columns here. So you can hit the configuration item here and drag it up or down if it's not close to where you want it.
Oh, okay.
yeah.
Through art studies. Okay.
Yep.
Thank you.
You're welcome.
No other hands raised.
Awesome. That, in a nutshell, is how you short trade. You sell high, you buy low, you collect what's in the middle.
Okay. Let me ask you a quick question, Eddie, because I know sometimes when we have time left over, you go on to like the next subject.
Yes.
Would you like to go on to the next subject now, or answer some of the questions that are still queued in the Q&A section?
Okay. Are they shorting related? If they're shorting related, we can hit.
They're all over the place. Yeah.
Okay.
The shorting. Let me see if
Yeah,
there are any shorting related.
That's fine. I can answer them, and then we can show real quick how to do the same thing we did using put.
Okay. You want me to find? I want to make sure I'm clear. I understand you. You want me to find the shorting related ones for just right now?
If if there are any shorting related questions, yes.
Okay. Okay. Let me see here. Okay, a couple of people asked if you could go back to the best time to short slide. I don't know if that was slide number 3, because somebody also asked for slide number 3.
That is slide number 3. I think best time to short is how about I just go through them here? I think it is.
Okay.
Is it not that one? Did we talk about the risks of a short sale? I think we did. Right? Things to be careful about when you're shorting. I don't remember what I did, so let me go over that.
Okay.
Yeah. So with trading, you have risks, and this is one of the things that is when you're doing shorting, it is not a long-term strategy. This is not a long-term strategy. Don't sell something and hold for 6 months. That's not the intention of a short trade. The intention of a short trade is to take advantage when prices are going down. In general, prices of stocks actually go up. That's a long-term trend. So if your strategy is to hold shorts for a long time, then you're setting yourself up for some rather serious losses. So this is a short-term strategy. How short-term? Maybe a week, 2 weeks, maybe a month or so. Longer than that, I don't think that stocks will fall for that long, unless it's a bad. If it's a bad company, then it could continue falling for a very long time. In which case, that's to your advantage if you sold at the top. But you always have the risk of a short squeeze. Let's talk about a short squeeze. A short squeeze is when you short a stock, just like we did. We sold Home Depot, and then traders don't think that the value of that stock should really go down. They think it's valued more than it is currently, and so they start buying, and the price starts rising. So that's that first bullet here that says rising prices. So rising prices, we understood and we saw that if we sold at 407 and the price continues to 408, 9, 10, and so on, you're starting to lose. That's a short. And when it moves up dramatically, that's known as a short squeeze, right? Short squeeze. Sometimes it happens intentionally. When it gets in on I forget the name of that group on Reddit. They're very famous for doing these kind of things. Wall Street Bets. Thanks, Jordan. Yeah, Wall Street Bets will pick up a stock and they will run up a price to do a short squeeze. It's very intentional. It is. You could argue it's malicious. You could argue it is. I mean, there's so many ways of looking at it. That's one thing. When price goes up above and beyond the capabilities of your account, then you could suffer what is called a margin call. What's a margin call? Usually several things happen. You get a first warning based on the risk from the broker, and they call you up or email you and say you need to sell some positions because your account cannot handle the positions it is in. That's soft. It means that you can salvage. Most likely what you have to do is simply just close out your positions. In extreme cases, or in even mildly extreme cases, the broker will just simply close out your trades. They will sell other positions as well in your account, not just the one that is suffering, if it is serious enough. And if you have lost more than your account can handle, you can end up owing money to the broker. Serious business, right? Means that you can start off with a $2,000 account and you do a simple short sale. Next morning you wake up, your broker has closed your account or frozen it, and you owe them $10,000. And that is why there's that big disclaimer every time you're trading that says that you can lose more money than you invested. This is one of those cases. It has unlimited max loss. And that is also why it requires an elevated level of trading. Level 3 and above, it's serious business. So this is not a short-term, a long-term strategy. This is short-term to take advantage when prices are falling, and you can take advantage of that. So what's a better way? What's a better way to do this to protect yourself? And that's why you're now in VIP, because we can teach you how to buy puts. And the maximum loss is how much you put into the put. I'm always finding these words that I have to use together. How much you put into the put. How much the put is worth. So we're gonna have to come up with a good joke list. So questions on that, on the risks?
Okay, another related question in the queue was about the 20% that you did. I don't know if the numbers had gotten mixed up. Let me see.
Yeah, 20%. That was relating to the stop loss?
Yeah, above does the stop market, should it be 20% above the distal line? And then she said, because we did 20% of the proximal line, 407 instead of 20%, 415. That was Nicole.
Okay. So yeah, that's a semantics issue.
Okay.
Once they get into the proper charting and they do their odd enhancers, then you will get the proper stop loss. And to calculate the stop loss on a short sale, you add 20% of the ATR to the distal line. Okay. 20% of the ATR to the distal line. That is how you figure out what your stop loss should be. So.
And Steve Taylor asked, is 415 the trigger or 418 when you are explaining?
So the trigger is 415 and the limit is 418.
Okay. Nindinka has her hand raised. Go ahead and unmute yourself.
I'm sorry, I forgot again. I'm sorry.
Okay, no problem. Okay, that's it for the hands.
Okay, did Miss Lane and Louise have questions?
Just popped up. Yeah, that was quick. Miss Lane, we're coming to you. Please unmute yourself.
Hello.
Yeah.
Can you hear me?
Yep.
Yes.
Do you mind going over that example on Thinkorswim again, please? How to go in and buy the sell to open and the sell to close. I kind of couldn't follow along with the mouse.
Okay, we'll do that momentarily.
Thank you.
Okay, so it's still on my screen here. So let me delete this order and do it one more time. So to get there, I simply clicked on the price and I did a sell custom with OCO bracket. Once I did that, I modified the numbers to match what my calculation had been. which was simply set that to 407 for the sell. Change my buyback to the 382, and my risk management was at 415. I adjusted my quantities here to how much I wanted to sell, and I changed that to GTC. The time in force, I changed that to GTC, which is good till cancelled. Hope that helps. Okay.
Louise, we're coming to you. Go ahead and unmute yourself.
Hi. So Eddie, I was just wondering from your comment before when you said that the loss is unlimited and the broker would contact you and you could end up owing the broker money. So I was just wondering, how about if you don't have any money to give to the broker? What happens then?
Yeah, you end up in small court or big court. I don't know. But
Oh, okay.
yeah, it is a serious business because remember you gave them all your financial information,
Uh-huh.
and in the agreement before they open the account, you agreed that if such a situation does occur, that if you end up owing them money there, they can come after you legally to retrieve that money.
Okay.
And they will do that.
Okay. And
Yes.
you mentioned buying a put and you would not get in that situation. Is that what you said?
That is correct. That's what we're about to get into.
Okay. Thank you.
You're welcome.
Okay, that's it.
That's it. All right. So how do we do this this whole shorting business when we're talking options? And before I do that, let me preface this. I know that we have, how many people do we have today? We have about 379. We were about 400 plus students. I think I counted 420 students at one point. Options is discussed in about 2 weeks. That's when we talk about options. So this is going to be a little bit new to you, and the intention here is not to introduce options so early. It is just to show how you can do the same thing with options. So if you've been around for a little while, then you will identify or you will be familiar with the topic of options. I'm going to skip all the basics of options just to show you the trade. And then in 3 weeks, when we talk about options, or in 2 weeks, then you will see that. I'm going to change here the look and feel back to around maybe just larger so that I can see that a little bit better. So with an option trade, I would choose a strike price that is at or in the money, even when I'm going with puts. And I would go 45 to 90 days or 60 to 90 days. Let me say that, 60 to 90 days. So once again here, I would go to, not once again, but for the first time, I would go into an option chain. I would choose a date that is 45 to 90 days out, maybe 48 days. That's what that 48 means. That's 48 days until expiration. I would choose an in the money strike. In the money to me, or I'm sorry, at the money or in the money is the one that has a delta of 50 and above. This one has a delta of 51. That's good enough for me. That's what I will choose. And I would be clicking on the ask column, right? 1820. Now we need to do some math real quick. The difference between the current price, which is 407, and our target price of 382, we discovered was what? We discovered it was 25. 25, and if we have a delta of, let's just round this down to 50, right? So our target exit premium would be what? 0.5 times 25, that's 12.5, plus our entry, which is 1820. So 12.5 plus 18.2, my target exit price would be about 30.7. Thank you, Sayal. So I'm going to simply set up a bracket order here. Again, buy custom with OCO bracket. with OCO, I'm sorry. My target exit price here is 30.7. That will give me a healthy change. And my stop loss here, it's 12.5 divided by 3. That's going to be about $4. I am going to put a risk of 14.2. Very, very subjective entry, by the way. Let me preface that. Very, very subjective. So, and that's the reason I'm going here real quick. We'll talk about this a lot in about 2 weeks. What am I doing here? I am entering an options trade. I am buying one contract at 18.20. We know that in options world, $1 in premium is actually 100 in real money. So actually 100 in real money. So 18.20 is $1,820. That is the investment on my trade. I am going to exit at $30.7. Last week or 2 weeks ago, we discovered how to calculate this. Do you all remember that? We discovered how to calculate how we get the 30.7. But real quick, it is the delta times the approximate movement plus the entry price. So it is 0.50 times 25, which gave us $12.50. $12.50 plus 18.20 is what gives us $30.70. So take a note of that $12.50, by the way. 12.5 is the profit. That's the actual profit that we could get from just one contract. And then 14.20 is the stop loss. How did I get to 14.20? I simply took my profit, divided that by 3 to make it a 3-to-1, and I decided that I can risk $400. Right, $400 times 100 is, or rather, $4 times 100 is $400. So that's the risk. Why did I say remember the $12.50? Because in terms of profit, $12.50 is actually $1,250. I wanted to keep remember that. I'm going to go real quick to TradeStation. When we are doing shares, even if we bought 5 shares, we spent potentially, let me go to my orders screen. Where's my orders? This is it. It doesn't say how much has been spent. Well, we haven't spent anything yet. But 5 shares are going to cost us how much, by the way? They're going to cost us 407 times 5, which is $2,035. Right? $2,035 is how much we're going to need in margin for this. That's the and that's not even the maximum loss. The maximum loss is undefined when we do it with shares. I just want to give you a perspective. So 2,035 is what my risk is, and it's going to be even more, okay? And the risk is undefined because this is a short sale. If we got into a short squeeze, we could end up owing $10,000. But come back to the options, I am risking $1,820. That's my maximum loss. Yep, that's my maximum loss because this is a put. I have the right, but not the obligation, to buy shares of Home Depot at $410. Right, we're going to talk about that in 2 weeks. But the potential profit we just calculated is $1,250. That's huge. That's huge. Why delta times 25? It's because that's the expected move. But let's see what the potential profit on this one is. It's $25, right? Times 5, which is $125. So $125 when you're doing shares versus $1,250 when you're doing options. Now my question is that cool or is that cool? There's only one answer. Guys, you know how to type cool. It's 4 letters. There you go. All right. That is way cool. I like it. I like it. I like it. So the quicker you can get to options, the better. But then I'm preaching to the crowd. You guys are already in VIP, right? Okay. Questions. Let's go with some questions now.
Okay. Luis, go ahead and unmute yourself. You're unmuted. Okay, maybe
I'm
no.
sorry. I should have lowered my hand. I'm sorry.
Okay, that's okay. I had DM'd you, but I guess you didn't see it. That's okay. Steven.
Hey, Eddie. Hey, Sai.
Hey, Steven.
Wait, quick question. Okay, can you spit out that equation again for the profit?
Yes. Are you talking about the one to calculate your target exit?
Yes.
Okay.
And the one again for the stop level. I know somebody else asked the same question.
Got it. Okay, so to calculate your target exit, well, you already know what your target, what your entry is, which is
right.
What is on the ask column, $18.20. Another piece of information that you need is the delta. So I'm looking at the delta column. Do you see that?
Yep, absolutely.
All right. So my delta here is 0.51 for ease of math, so that I could do it in my head. I just rounded that one down to 50. Okay. So 0.5 times, we also need another metric, which is where is our target exit? Our target exit is 382. So the distance between 407 and 382 is 25. Okay. So 25 times the delta of 50 is what gives us what, $12.50?
You said the 25 times the delta.
Yeah, 407 minus 382 is 25.
Yeah.
Is that right?
It could be. I didn't put it in.
Yeah, it's 25.
So basically, I'm going to throw this in a spreadsheet. So you're basically doing the proximal with the target price minus the proximal of the 407 entry equals 25 times the delta. Is that what you said?
Yep, times the delta and then plus the entry premium.
Delta plus entry.
So, Steven, switch your mind over from shares to options.
That's what I'm thinking of options.
Okay, so your entry is 407.
Right.
Or when the price is 407, and your target exit is when price reaches 382.
Correct.
The difference between those two numbers is 25.
Right. Of what
Now, when you go back to your option chain, you need to find out what the delta is times the expected movement.
Gotcha.
So 0.50 times the expected movement is $12.50. So trick question that is not really a trick question here. If you buy a Honda Civic and you buy it for $10,000 and you want to make $5,000, how much do you sell it for?
Say it again.
15,000. Right, Steven?
Yeah.
Yeah. So that's the same thing I'm doing. I want to make $12.50 on this trade, so it's simply $12.50 plus $18.20. Right, and that's what gives me $30.70. If you watch my last video, by the way, we went into excruciating detail about this.
Oh, sweet. Okay.
So please watch that, and
that's on YouTube, right?
Yes, it is.
Awesome. Thank you.
You are welcome. Yeah, options are great. They give you leverage. And by the way, for those who have not yet got into options, we only bought one option contract. One option contract represents 100 shares for much less money than you could spend on 5 shares. So that's going to be a huge leap. You made the right choice by moving over from the beginning program into the advanced program, because this teaches you how to make exponentially more money with less. Let's see, April.
Hello, can you hear me?
Yes.
Okay, great. Okay, so looking back at the chart for Home Depot, you switch back to that. Look at that support level at 400. Why don't we wait until that is broken and then enter in the trade?
You could wait. You could wait until that is broken, and I see your point there, because once we hit that support level of 400.27 or 400.22, two things could happen. You could either break through it or go back up, right?
Mm-hmm.
And your thesis here is that you want to test it to make sure that price has broken down or broken through before you short it.
Yes.
I agree with you. That's good thinking. However, you still have that $7 opportunity here.
Right.
And before you enter the trade, you also want to make sure that you confirm direction.
Okay.
So the basics are, if putting all the steps together, you do your chart, you do your odd enhancers to make sure that first and foremost, you are in the correct seller zone. For the purpose of this exercise, we assumed that 407 is already in the seller zone and we are ready to short. But I can see how you're thinking as an options trader. You definitely want to make sure, because when you're dealing with options, that $7 is huge. $7 actually represents $350. Is that about right?
Mm-hmm.
You know how I got to 350?
No, you can explain it.
Well, delta times
Yes.
delta at the money is what, 50?
Right.
And a $7 movement, that is $350, right?
Right.
50 times 7.
Mm-hmm.
Yeah, real quick. So
maybe what I would do would be to set an alert, keep a watch around that 400 level.
you can do that. I'm simply going to right click on
Just in
this,
case it bounces.
create an alert, and say, I'm just going to say April said to watch this level to short at or below. How about that? Once it reaches 400, is that cool?
Yeah.
You can do that.
Okay.
And now I'm going to get that alert on my phone. And I'm going to remember your name. That is the
All
April
right.
alert. Not to be confused with April 2022.
Okay. Thank you.
You're welcome. Your question, April, by the way, is very relevant, especially in about 2 weeks, because we're going to look at risk reward when it comes to options trading. Very small movements represent huge volumes of money because of the leverage involved. So I do like your thinking of watching that support level. And for those who are new, when she said support could also be translated to mean buyer level. So there's two terms. The industry calls it support. For buyer level, resistance is a seller level. So when she said support, it was immediately apparent to me what she was talking about. Okay, do we have any other questions out there?
Okay, that
All
was
right.
April that just went, correct?
Yes, that was
Okay, she still has her hand up.
that was April. Yeah.
Okay, no other hands raised. The rest of the questions in the Q&A, they were, like technical questions, not directly related to shorting.
Somebody says Eddie's saying he doesn't leave money on the table. Oh, I leave money on the table. Yes, I leave money on the table all the time. So I'm not sure what she was referring to there. And what do I mean by leaving money on the table? It means that when I plan my trades, I have a very defined exit and entry and a very defined exit. And if price continues in my favor after that, it's none of my business. I'm already out of the trade. So yeah, I do that. You have to make it very, very intentional. No accidents. All right, I'm going through here. I can't read all these questions, so
Yeah, one hand just went up, Miss Lane.
Okay.
Miss Lane, we're coming to you. Please unmute yourself.
Another question. You stated you covered this intensely in a YouTube video. What's your
Somebody
YouTube
post a link
channel?
for her.
I just dropped it. I'll drop it again. So I shared the link to Eddie's YouTube channel. VIP study group is every Saturday. So if you want to find a specific video, go to his channel and search for that day or look at the titles. Also, sometimes Eddie shares the videos in the VIP Facebook group. So you will go to Eddie's name and then search his post. That will be the best way to find it.
Awesome. And that link, was that to the playlist or was that to the?
That was to your channel.
All right, to the channel.
I
Those
can
are
find
public, so they might not see that. You might want the actual playlist. Let me see if I can bring it up.
Okay, because when I clicked on it myself to make sure, and it went to your channel and it showed the titles in the list.
Okay.
But you still do it too.
Yep. Let me go here and see if I can find it real quick.
And while he's doing that, I just would like to suggest to you guys, whenever you see Alexander posting in the chat, take notes because he has excellent information to share with us. And he's in a couple of videos on the trade and travel level for risk management. So please pay attention and take notes when you see Alexander sharing gems.
All right, I think I just posted to the chat the playlist. There we go. Not that. That's not what I want to show.
I don't see it. You said you posted the link in the chat. I don't see it yet.
I think I did.
Maybe it's just me. Did you maybe DM somebody? I don't see it. It's there. It's there. I see it. Okay. Oh, I keep.
You might have to scroll up. There's like
it's
400
saying-
people in there. So
That went so fast.
yes.
Okay, I'm gonna copy it so that I can share it next time when someone asks.
So this is my Safari browser here. So if you go in, if you click on that link, this is what you're going to see. And every time I post something related to VIP, it is going to come in here. By all means, help me out, subscribe, hit like, add comments, all that good stuff. That is very encouraging for me. So, any other questions before we call it a Saturday?
I just want to say right quick, Eddie, before you click leave, like once you turn the recording off, I want to share my screen to show you how it's different for me than how it's been with the features.